we're on a Forex chart, specifically the Euro-Dollar 15-minute time frame. The first step is to look at the last two crossovers that formed, which is this one and this one. Now, if we check the first one, it was an upwards crossover, so we would have entered a long trade. If we had done that, the trade would have actually been a success, since the price continued higher. So this is labeled as a successful crossover. Now let's check the second one, which is a downwards crossover. If we had entered a short trade here, it also would have been a successful trade, since the price went down significantly. Currently, the last two crossovers have been a success, which tells us that, in this specific chart and time frame, crossover signals are reliable, so we can look to trade the next signal. And here, we get an upwards crossover, so we enter a long trade. Besides the entry point, the placement of the stop loss is also equally important. We don't want to place it too close where it gets easily triggered, but not too far where we risk taking a big loss. The best way to place a stop loss, in my case, is to find a support or resistance level that's close to our entry price. In this example, there's a clear resistance level here, which makes it a reasonable spot to place our stop loss. For our take profit target, we could set it at 2 times the size of our stop loss. And as you can see, price hits our profit target. So, the key to this strategy is to look for a chart where the previous 2 crossovers were successful, because that gives us confirmation to trade the next signal. However, just because the previous crossovers were successful doesn't mean the next one is guaranteed. If that were the case, then crossovers would work forever. But that's clearly not how markets behave. That's why we always place stop losses during our entry, in case the trade goes against us.